Alright, so in this video, I'm going to discuss about how I use bias in institutional order flow signatures to determine a narrative. And this video is part of the free StoianCapital mentorship on YouTube. So this video is meant to be uploaded on YouTube. This is no longer a part of the private mentorship that I have uploaded for free on YouTube. And before we get started, I have two things to tell you. Number one is that I'm going through an ongoing sickness in which I cough a lot. So you're going to hear me pause, or not hear me pause, but you're going to observe the fact that we have pauses throughout the video. And those are not to mask some mistakes that I might make in my communication, for I work upon that as a quote unquote mentor. I don't like calling myself a mentor, but you're going to see some pauses like this one because I just coughed. The number two thing is the fact that this is not a real mentorship, quote unquote mentorship, because the only thing that I do is I literally just present what I know and what I use, and that's it. So if you want to call this mentorship, then so be it. But I just present to you what works for me. If it doesn't work for you, then I don't know, try something else. But if it does, then God bless either way. And one more thing that I want to address before we get into the lecture is the fact that before we even get to talk about bias in institutional order flow signatures and about how we use the fair value gap and how we use the order block and all of those business and all of the business that we discussed within the previous quote unquote mentorship lectures, I want to let you know of the fact that if you are an individual which is not able to even follow through a 30-minute video or 45-minute video, or an individual which is constantly engaging in disengaging within the rules, then nothing will work for you. And that is the first thing that you have to do realistically. So if you're an individual which cannot respect simple rules, and I'm not attacking nobody, it's like, this is the truth, because I've also went through these things by myself, and before I even got into the concepts, because the concepts work. Before you even get to the concepts, you have to really quote unquote master yourself. Like, you say this has to happen, period. If you cannot do that, then just know that nothing is going to work. With that to the side, I just want to quickly give the credit where it's due. So the concepts that I'm going to present within these videos, and within this video particularly, are created by the creator, Smart Money Concepts, which is the Inner Circle trader, or Michael Huddleston, which created all of the concepts that I use actively every single day. And if you want to learn more about these concepts, and I know that you're already accustomed and you already know who ICT is, I tell you to go watch ICT, because I'm a student of ICT and he deserves all of the viewership, he deserves everything. And perhaps this is your sign to go back to ICT's video and just stick through the concept. But if you want to watch this one, then, and again, if you want to get closer to me as well, I also have an ongoing private mentorship in which I do not do the videos anymore. I do not do the one-on-ones anymore. I have an ongoing class which I'm teaching weekly, which is the applications of this video. So you're going to see me teach, quote unquote, or show you how I use every singular thing I use to have such level of prediction excellence, if you want to call it like that, within the market. And the reason why you can be, or you want to be, a part of that is because we gave you private attention, and we can look at StoianCapital. We can look at your individual trading and identify your own mistakes and the next step that you have to take. So with that to the side, I want to start the lecture a narrative and bias ahead of market open. So the reason why we have a narrative and a bias ahead of the market opening, and a narrative, for if you remember very well, or if you don't remember, a narrative is how the market is going to go into the direction in which we seek the market to go. So if you want to trade, or if I want to trade with the highest degree of probability, then what I want to do is I want to be in sync with a higher time frame perspective. And if I am an intraday trader, then what I want to have is the weekly chart and the daily chart, and this is the majority of my focus. So when I go into the weekly chart and the daily chart, the first thing that I look for is the direction. And the direction, as stated in previous videos, is given by a drawn liquidity, which is either a level of buy side or sell side liquidity, or a liquidity pool, or an inefficiency, a SIBI or a BISI above or below the market. So it's SIBI, BISI, buy side or sell side. That's it. Or consolidation, of course, in between the equilibrium, which most of the times there's also going to be a fair value gap in it. So that is the criteria for identifying a bias. Once I have a bias and I understand the fact that said bias is high probability for the week, then I get the narrative, which, if I try to anticipate the next weekly candle before the market opens, and I only want to trade with the highest degree of probability, then I'm only going to trade within the distribution part of the week after the market has already created the low of the week. So what I do proactively before the market opens is I set a direction, I set a bias, and based on said bias, I see every singular signature or every singular thing that happened beforehand. I see it within that bias. For instance, if the market created an immediate rebalance and I'm looking forward for the market to go higher, then if I'm anticipating the next candlestick, if we're going to go higher, then I want to see the market go higher with speed, and I don't want to see the market go back below the immediate rebalance, which gives me two things. Number one, what I want to see if I am correct, so the best case scenario, and what I want to see if I'm incorrect, and if I see that, I'm going to stay sidelined. But if we are correct, then the next thing that I have to do is I identify the fact that the market has to open, it has to create the low of the week, and once the low of the week is created, which I filter out completely, and these rules are stated before the market opens, so that when the market opens and if it does a big movement to the downside, which is opposing to my bias, I do not take it and I filter it out proactively because I've done my analysis and I respect the rule of my analysis. Because I want to see the market go higher, I filter out all of the opening and manipulation. And once I see the intraday market structure shift, which is the first sign of the fact that the market switched in a bullish perspective, from a sell program into a buy program, then I know the fact that we might see the distribution part of the week begin. Therefore, what I do is I filter out losses by filtering out the manipulation part of the week. Therefore, as a reminder, in the previous lecture upon proactivity and reactivity, let me give you an example of this, I've already gave you one. So if we are doing our analysis before the market opens and we anticipate the fact that the next candlestick is going to have the drawn liquidity higher, and we understand the fact that the low of the week might be created within a PDOA that is supportive, then when I see the market going back into said PDOA, if I have the impulse to try and trade it, because I can see the fact that the market is going to go there, and I can trade based on the fact that I see the market going there. But because of my rules that I've stated within a clear mindset in which I was not affected by me at this time seeing the market go down towards that level, if I trade based on that, that is proactivity. And if I understand the fact that I only trade based on said rule, then everything that is against that rule, perhaps only in the beginning, because of course you're going to be able to also trade the manipulation when you get accustomed to only trading the distribution, everything that is against that plan is a distraction. And it is an emotional reaction to you being able to see that. So therefore, if I'm a proactive thinker, what I'm going to do is I'm going to understand the fact that I see the market going back into that level. I can see and trade it, but I'm going to leave it out, because if I get into a habit of trading the manipulation, perhaps I might win right now, but on the long term, on a monthly perspective, if I go back and look at my trades based on the manipulation, I know that most of the times when I try to do that, I'm going to be wrong. A narrative and bias ahead of market open also helps you to identify the next likely direction for the weekly, which will be the only direction in which we will trade. So I understand the fact that I want to see the market to go higher, and anything else which is not the market going higher is not taken. It also, by extension, helps us to identify the day in which we will trade based on said bias and narrative. So if I identify the fact that the market has to go to the upside, and I understand the fact that the low of the week has been created on Tuesday, then when Wednesday comes and Thursday and Friday, the following days, I know that number one, I'm going to trade with a higher or with a bullish mindset. And I know the fact that I have the highest degree of probability on that specific day of Wednesday. And within Wednesday, I also know the fact that I'm going to have set setup occur within the AM session because of specific rules based on time. So here we have an example of this week, and at the time of this recording, we already have materialized towards the consequent encroachment of this fair value gap here, went above into it. So this is Thursday. But the first thing that I want to understand inside of this chart is, where are we drawing next? What is the next inefficiency or liquidity pool that the market wants to reach next? So what we're looking at is this level of buy side. And once I know the fact that the market might be or might want to go towards this level of buy side, then by extension, every singular signature that I see ahead of this candlestick, this, and all of this business is seen within a bullish perspective in mind until we hit this target. So this will not be named as a market structure shift. The market goes back into this CB and then moves lower. This is going to be seen as a level of sell side in which smart money accumulates longs. And if smart money accumulates longs, then I don't want to see the market go back here. But if the market shows any willingness for it to go back into this price range, then I know that I was wrong and I will stay out, or I will reverse my narrative. So I have three scenarios or two scenarios. If the market goes higher and I'm correct, then I want to see the market open. Use this as a means of inversion because we closed above it. So if we're going to go here, the market should use this as inversion or even leave it open, which would give us the fact that the market is strong, and it should continue higher. Along with this is an immediate rebalance or close to an immediate rebalance. This is the market using an order block. So these are also signs of the fact that the market is going to go stronger with speed towards our level of buy side. So this is the perspective in which I see the market. However, if this is violated and this is violated and this is violated, and I don't see any signs of the market going higher and creating market structure shifts intra-week on a 15-minute or a 1 hour perspective, then I know that I was wrong and I will either stay sidelined, which I prefer to do, or I reverse my narrative. This is the business that I discussed. So order block, somewhat of an immediate rebalance here, a small fair value gap, which indicates speed. We closed above this order block. Therefore, if we are going to go here or we're going to go here, then this is going to be used as a means of support. Market does that, closes at this high, and then we have the market opening above this high, which indicates speed, closing above this inversion gap here, and therefore, if I did not have this candlestick in place right here, and this is how I do my weekly analysis, then I would understand the fact that I would want to see the market open, go as low as this inversion fair value gap high. Once the market goes here, I understand the fact that there is a high degree of probability of the market creating the low of the week. So once the market opens and goes back here, this intra-week movement is all filtered out. So I don't care about it. I don't try to trade it because my perspective is here. And once we create a market structure shift within the 15-minute or 1-hour chart, then it indicates the fact that the market might have started the distribution for the week. And if I'm looking forward for this strong liquidity here, then I also understand the fact that this bearish order block, by extension, should fail. And how does a bearish order block fail? The market should close above its 50% or mean threshold. So therefore, my weekly target is the order block opening price, order block 25%, order block mean threshold, and a closure above it, which would even take us towards the buy side liquidity pool. But if the market closes below this and it reaches down into the volume imbalance and it reaches below the 50% of this inversion order block, then I might be wrong. And even if the market just goes there, then I don't have any market structure shift, and therefore I did not incur any loss, and therefore I would stay sidelined and I would label this as an opportunity, and I would be grateful for the fact that I waited and my patience would be rewarded because I did not lose anything upon this premise. And there's two things that I can do, which is stay sidelined or reverse my narrative and aim for this. And the last thing that we can do, or the last thing that I do, is I check the high impact news drivers event to try and time the time in which the market is going to create the low of the week, and that is mostly on high impact news drivers like NFP, CPI, or FOMC. And I also have a video upon that within the private mentorship. The bias is the direction, the narrative is how the market is going to go here and what I want to see if the market wants to go there, and the when is given by the high impact news drivers events, because the market is going to consolidate to accumulate opinions both above the market and below the market. And once we have those opinions accumulated, then within the high impact news driver event, the market is going to manipulate towards the opposite, so to the downside, which would create the low of the week within this inversion gap or whatever Peter A wants. And if it leaves this open, this is a sign of speed. Once the market goes there, I anticipate the fact that the low of the week might have been created, and therefore I try to pre-anticipate a 15-minute market structure shift within my 1-minute trade, or I wait for the market structure shift, I wait for the retracement back into a fair value gap. Then once the market goes back there within my 950 to 1010 or 1050 1110 macro, I take my trade upon the daily target and the weekly target, if that is the case. And for this specific week, we would look forward for the low of the week to be created somewhere around Monday, Tuesday, Wednesday. And of course, these are templates and or profiles, and they might vary and they will vary based on the market condition. But if you stick to the rules and you understand how the market normally delivers and you do them over a long time period, then you'll be also able to understand the exceptions by doing the mistake of going in with the normal weekly profile in a non-normal week. So I use a mistake like, okay, this week was not the same. But I use that mistake to understand when the market is not doing the same weekly profile. It's like, are we trading within the equilibrium? Are we trading within the 75% of the implied dealing range? Are we trying to get into a liquidity pool right now? Are we trying to go there fast? Are we consolidating? Those are criterias which are based upon the narrative. And the exceptions, you are only going to find them after you stick with the same rules every singular day, every singular week, every singular month until you understand how the normal looks like, so you can compare and contrast the normal and the exceptional. And this was Stoyan. I hope you guys enjoyed this video. I hope you guys enjoyed this lecture. I'm deeply sorry for the fact that I have a lot of pauses within this video because I cough a lot. I literally cough like one or two sentences in. But if you want to join a private mentorship, which is now based on a Saturday call, so I amplify upon your trading as well. It is a personalized analysis upon your trading as well. If you want to do that, then make sure to join my free channel, which is in the description below. And you're going to find within the pinned message inside of the Telegram my Telegram handle, and you can DM me with mentorship and we can start within this week. I hope you enjoyed this one, and I'll see you in the next one.